everything bad, good will come from it. Good will come from this war with Russia for sure. It's already, some good has come. Good will come from the wake-up call we've had with Silicon Valley Bank. Hopefully someone's motivated to run against Biden and Trump. We need some more white swans. We've had too many black swans. Or a good black swan would be we resolve Ukraine, Russia in some form. Russia just backs off, or there is a peace resolution there. And we elect an outstanding leader that there's common appreciation for, that kind of brings us together. I'd love to see that happen. The world is a structurally different place than it was for the last 20 odd years. And you're going to see persistent levels of inflation, 3 to 4% inflation for the foreseeable future. I think that's certainly being missed based on the pricing of long-term bonds. You can get it only about a 3.6% yield. I haven't checked my screens. It's probably so volatile. I don't know what it is today. A 3.6% yield for committing to the government. The government's only borrow money. The government's borrowing money for 30 years at 3.6%. That can't make sense in a world where inflation is 3.5%. In an uncertain world, you got to own Universal Music Company, Universal Music Group, because the one thing I'm confident about is more people will have music subscriptions or be streaming music from whatever device, and lots of different devices with different use cases on a global basis a decade from now. And I think that's a certainty, and it's a very capital light business. And so I think that's a good place to put money for a decade. There are businesses that are guaranteed to be disrupted by blockchain, that are old-fashioned, old businesses that everyone hates because they're monopolists, and you can disrupt them with blockchain technology. So I would be short those companies. There are many reasons to have concern, right? We've got the North Korean situation. We have Ukraine, Russia. We have China brokering a Saudi Iranian rapprochement. And now China's becoming that stuff the United States used to do, right? We have Russia crashing, their planes into our drones. We have China with its eyes on Taiwan. We have the United States draining its strategic petroleum reserve and draining its weapon resources when it's doing the right thing in supporting Ukraine, but it should be giving, our Defense Department should be giving orders to all of our defense companies to rebuild our weapon stocks so that we're not out of inventory in a highly uncertain world. We have, Chairman Powell, Mr. Powell has got his job has become a lot more complicated in the last 4 days, right? We have real serious inflation in our country, and we have, financial instability. And he's got to work with his colleagues at Treasury and the FDIC to stabilize the banking system. And I have a really simple solution. I kind of laid it out a bunch of times. And hopefully my laying it out won't discourage them from doing it. But we've got a lot of, and then we have, the political divisiveness. And then social media companies that can generate more attention by driving us to the left and to the right. So what we need a Facebook that motivates us to love each other instead of hate each other. That would be someone should build that company. So there are a lot of things that make no sense to me. So for example, if you own real estate or certain other kinds of assets, you can do what are called like-kind exchanges, where you can sell an asset, and you pay taxes, or you can exchange it for another asset, right? And you don't pay any taxes. It's a total joke. It's like a gimmick. It's a complete giveaway to people in real estate. There's so many, if you're a dedicated real estate investor, you can pass through, like President Trump, you can pass through the depreciation on those real estate assets and offset your other income, which is why Donald Trump didn't pay taxes pretty much his entire life. For things like that are easily fixable. Here's another one. So if you're Elon Musk, right, I'm not a believer in wealth taxes, but if you're borrowing $5 billion against your Tesla stock, and you've borrowed more than your basis of the Tesla stock, I think the distribution from that kind of borrowing should be taxable, because it's really tantamount to a sale. You're getting back more than the money that you invested. That should be, when you refinance a piece of real estate, commercial real estate, if you buy an apartment complex for $100 million and it goes in value to 200 million, and you refinance the mortgage and you take out 50 million of proceeds, I think those proceeds and excess, should be treated as a taxable. I was, woke up Saturday morning after the events of the week, pretty convinced that if the government didn't, at a minimum, guarantee deposits at Silicon Valley Bank, we'd have a massive run at pretty much every regional bank on Monday. And my advice was, we need to guarantee all deposits, not just those. And I think, unfortunately, the run is continuing. I mean, if you look at the deposit inflows at the big banks, if you talk to anyone at JP Morgan who works at opening accounts, they're working literally round the clock to take in all the capital that's flowing in. That's not good for our banking system in our country. And that was what I was afraid of over the weekend, which is why I was so public, if you will. So we did a transaction with probably the best company that about any of them that merged with a SPAC, Universal Music. It was a super predictable, high quality business. We buy at a very attractive valuation. We gave up our warrants, which were the only sponsor economics we received to do the transaction. We committed $1.6 billion alongside the public shareholders. And the transaction had some complexity because we had to accommodate tax and other issues of the counterparty who is selling their interest in the company. And despite it being great for the shareholders, despite our having exactly the same alignment with other shareholders, every other SPAC, there was founder stock and all kinds of other instruments. The SEC turned down the transaction for highly technical reasons, which substantively it should be precisely the kind of transaction they're going to approve. And I guess the takeaway from that is sometimes, a lot government regulators focus on the technical details as opposed to high-level principles. And I think they could, you look at Silicon Valley Bank, just to close the circle, right? They made one of the most basic mistakes a bank could make, right? We had something called the S&L crisis in the 80s, right? Why? Because banks had a bunch of fixed-rate mortgages, and they had floating-rate liabilities, and rates went up, and a whole bunch of banks became insolvent. And so since that time, banks have learned to kind of have match funding, right? They have floating rate liabilities, so they should have either floating rate assets, or they should hedge their fixed rate assets for floating rate assets, or they should sell their floating rate assets as they create them. And here you had a bank that violated all the basic rules, and they're regulated by however many different control of the currency, FDIC, make your list of government regulators. And this is like one of the simplest high-level things that you should check about a bank, and somehow that was ignored by the regulators, and they had to be focused on a bunch of technical stuff. So I think the long answer to the story is, if we had principle-based regulation where people focused on the big picture, it would be way more efficient, and I think we'd have way fewer bad accidents. So I think wealth inequality is a big problem. I think there are ways to address it, and I think the key is, the analogy I would make is, one of the things the U.S. has done very, very well is promote home ownership. In fact, they did it a little too well going into the crisis, but in general, it's been a good thing. And our system of 30-year fixed-rate mortgages has enabled home ownership for a lot of people, and that's also created a lot of wealth. And the sort of the middle classes and homeowners, up through the financial crisis, while their wages weren't keeping pace, is with upper income strata, they were making a lot of money in their homes. And then the financial crisis and over-leveraging wiped out people's sort of home equity. And I sort of view that as kind of the fulcrum moment when the wealth inequality issues really started to build. And I think the key is, people need to own a piece. And by the way, that started to rebuild in the last, since the financial crisis. A lot of people bought homes, recapitalized, and they built wealth in their homes. But the piece that a lot of people are missing out on is they're missing out on participating in the growth. That's the Tom Piketty thing, which is that, wages have not compounded at the same rate as assets. Asset compounding has vastly. So if you're someone who has assets that you have beyond what you need for your daily needs, and you can invest capital, you can build wealth. We need to give that to every American. And, compounding is this very powerful thing. So the New York Times did a piece on favorite ideas to help solve problems. My idea was, you give every baby that's born in America, whatever, a $7,000 account. I just sort of making up a number, $6,500. when they're born. And they can't remove money from that account, and it's tax exempt, and it compounds, and it gets invested in like an index fund. If it earns, historic rates of returns in markets, by the time you're 65, it's $1 million. But it gives someone a minimum stake in the success of the country, of capitalism. It makes them an owner, right? By the way, that would cost $20 billion a year to do that. I think the math which seems like a tiny little number. Today, just take the number of babies times whatever, $7,000 or $8,000. It's like a nothing thing. But I think it would start to give everyone in this country a piece of the success of the country. So I think we need these sort of savings accounts, and we can't wait until people start creating an IRA or 401k by the time they're 25 or 30 or 35. You want to start when they're a baby, just because the laws of compounding. That extra 25 years is very, very material. So I think that's a key device to help address the problem. And I think we need smart tax policy. I think the Elon Musks of the world, I think would support this kind of tax. It makes sense. The problem with the wealth tax, if you got the Biden wealth tax, which is like 25% of the appreciation of things that you own privately, it's going to bankrupt every startup. No one will ever start a business in America anymore, right? Because no one will be able to. What do? You sell as the, God forbid, someone puts money in your company at $1 billion valuation. All of a sudden, you owe, if you own half the company, you owe $100 million in taxes that year. Those kinds of taxes, I think, are, destructive. You don't want to have a tax policy that destroys the economy, right? You want to have a tax policy that makes sense. But there's certain things that are just wrong and unfair, and they just persist. Like, by the way, carried interest, which I've said my piece on for a long time. Giving someone a disproportionate share of gain is a very powerful thing to drive economic behavior. But I think differently about the real estate entrepreneur, the oil and gas entrepreneur, building a business than us folks in the asset management industry. I don't think we need that extra tax advantage, i.e. carried interest, when you're managing assets to motivate our economic behavior.